morning, afternoon, evening, wherever you are. Doing our standard market review slash Q&A. I gotta leave in about 40-ish minutes. 40, let's say 40, 50-ish minutes. So we'll be going till then. So if you're new here or if you haven't been to one of these before, basically just any psychology, ICT concepts, model related questions, anything that you have, you can post in the chat here and we can get those answered. In the meantime, and in the start, we'll do a little market review from today's price action and then answering those questions as we go. So anything is legal. We normally run these on the weekends, but I was quite busy over the weekend, so we're doing it today. All right. So we'll get the market review out the way in the beginning. So obviously we are at all-time high conditions. NASDAQ continuous contract here, obviously. We had purged all-time highs with Monday's price action. So nice to see that. Obviously, like I said on yesterday's review, we are not trying to pick tops in any way. Just trading the price action day by day and not trying to say, oh, it's gone up too far, look for shorts, things like that. Just playing the price action as it is. The tape reading stream from this morning is posted up into the YouTube vid section. So if you want to see me reading it live this morning, I took a loss and we'll cover that as well of what I was expecting. And obviously as a result, what we got. It's good to learn from today. I think right off the bat, I'm going to say this is probably one of the hardest days that I've come across probably in the past 2 months or 3 months. Personally, that's my take. I think since tariffs till now, today for me personally was probably the hardest day to come in and say, yeah, this is what's going on. Yeah, this will be recorded and posted up later. But when I'm looking at price action, and if you're looking at price action as well, the ability to come into each day, and even if you take a loss, if you take a win, if you take no trade, to come in after the fact and say, okay, I see what's going on. I see the logic behind this. It's a very good skill. Why? Because then you're able to learn from every single day what's going on and then modify and grow your understanding of price action. Today, for example, and for the most part, I feel like I have a pretty good understanding of price action. And if you're probably even in this, you probably value my market reviews in some sense, and I greatly appreciate that. But for today's price action, it is very hard for me to say and really look at it and say, yeah, this is what's going on blatantly. Okay, I can come in and fix it. Because to me, today is in the entire week, like Simple said, it's a very funky week. We have NFP on Friday, or sorry, on Thursday this week. And this is the almost price actions you see on an NFP Thursday, right? Like this is the kind of price action you see right before an NFP. And we'll go into it. You have all the indices lining up. Today, this morning, I was bullish with my bias. I'll share. I don't think I posted it this morning, but if you go back into that tape reading video, bias is bullish. We had a 4-hour and a 1-hour inefficiency being traded into, looking for kind of a move back higher and a continued move coming in from Monday. Instead, we have a bearish drop during the AM session. It's a very late drop as well. Got an inefficiency here on the daily. I'm going to mark out as obviously it's tagging that. We want to be notifying or notice that. And then as we go back to, let's go back to the current contracts, we can just see the price action over here. So daily inefficiency here being traded into, and I'm going to look at this from a perfect hindsight kind of mentality. So my understanding was coming into midnight of today, inefficiency there. We had taken out the previous daily low and had some wick off of that. We had the London high as a target. That was my target for today. But let's look at price action from kind of perfect hindsight for today of what actually happened, so we can say, okay, this is something we can learn from. And I'm learning from this as well. So we have a 4-hour gap here in a short-term discount. There's a reclaimed inefficiency. Dealing range between this low and this high, if you want to use that. That's an intermediate term low there. Inefficiency and discount the 4 hours. So that'd be like a weekly. This is a weekly IRL, right? A weekly IRL target. We had ran out the previous weekly high over here clearly. And then on the 1-hour chart, this is where I want to start to get into things. it's hard even on the 1 hour chart when you look at this and you look at obviously the comparison between the three. If I pull this up, coming to the session, we don't really have any major SMT at the highs. Monday's high here was ran out obviously at 1500. Don't have SMT there, right? You can see that being ran out there, and then same thing over here at 2100 across the averages, no SMT there. So very hard for me to say, okay, we're bearish off of that, but no SMT. Okay, reading the price action as it is, I'll continue to do that. I won't give my input of what I was seeing from the rest of this. Wick up here, taking out the buy side, closing back within the range. This wick is being used as an inefficiency, trades up into it and holds consequent encroachment of it there. Then it starts to drop back down with displacement through a sibi there, right? Inefficiency there. You could also use that short-term low as a market structure shift. This would be your change in state delivery on a 1 hour chart, and also an inefficiency here in the form of a gap, right? So that would be an inefficient gap we're being traded into. Also, you can look at this inefficiency here, which we will mark out, okay? And from there, you have the previous daily low here, which was ran out, and that was my bias. And then you also have, in terms of an ERL, this ERL liquidity pool here. Okay, so gap and premium on the 1 hour chart, sell side here from the form of previous daily low, obviously the new week opening gap, and then the Friday's daily low. That's going to be also an important ERL. All right, so as we go to the 15-minute chart, we're going to start to overlay some of these the sessions. And it's good to mention as well, we have decoupled indices. And that basically means that as we look at the indices, YM followed what my bias expected to be, which is bullish. Mine just from 930 basically until close, bullish. NASDAQ drops, stays within the range, and then ES consolidates. This is a decoupling of the averages. This is a very almost low probability, or lost sound. Okay, I'll wait for a little bit just for everyone to say. Give me a thumbs up. All right, is audio good now? All right. I don't know why it does that from now on. Kind of. Anyways, I was talking about decoupling averages. You got these three balls all moving in different directions. Either a sign of higher time frame consolidation, or this is what I said. Normally, you see this pre-NFP like the day before, not this early on. Nonetheless, London making the high here. We had that 1 hour gap I marked out here. We also had Powell speaking and 10 a.m. news. With any time you have 10 a.m. news, the easy low risk entry, it would be silver bullet. All right. I also want you to notice, as we're trading up here into the 1 hour inefficiency in premium, where are, if we know that obviously the day, obviously the session is supposed to be moving in these market truths, basically the things that are always going to be true every single day. We know a couple of them. I'll list them out here. The candles and the days and the sessions are always going to print in this way. It's also going to be moving from ERL to IRL, IRL to ERL. You know that as a market truth, meaning every single day, every single week, session is always going to be following these things along with other things. And we can always, if we were to come back, especially on a day like today, we can list out these market truths, and I'll list them out here actually. You got time as well. You've got stages of price delivery. You also have MXMs. These things are always true in every day. So when you come to a day like today and you're asking yourself these questions, you just frame it on these, you get your answer of what kind of the answer key of today. All right. So if we're going back into this, ERL to IRL, if we're tagging a 1 hour gap, and the reason we're using the 1 hour chart here is because the 1 hour is time frame paired with the daily. Very commonly, you don't see a daily ERL swing high down to a daily gap. Very rarely will you see that in one candle, right? It's perfect when you see it, but a lot of times you don't. So what do you end up using? You end up using a chart that's paired directly to that daily chart, such as the hourly. And now all the PD arrays on the hourly chart can directly almost correlate to the daily chart, meaning if we're going into a 1 hour buy side or a 1 hour gap, that pairs very well with where the daily IRL would be. And then same thing with daily ERL, same thing with the 1 hour. So I like to use the 1 hour because there's going to be a lot more data and it's a lot more consistent than using just the daily chart and seeing, wicks and candles. It's a lot harder to find precise levels. ICT does that. I don't personally do that, just because I like to see a little bit more of a fractal MMXM than exact, oh, here's a quarter of a wick. I don't really like to do that in my own analysis. That's just a personal preference. But as I was saying, inefficiency there in premium. Notice the mitigation block here. Down closing candle plus the wick, that's a mitigation. You got the previous daily low, that's the first ERL, time-based. Where is the next ERL that'd be time-based? If we're going from IRL, we got to go to an ERL. The very next one is all the way down at the PM session low. Right? You got that one. You got that one. Okay, so then Flux, why does it go so far? That's why, because if it's going from an IRL, if we're looking at where's the next ERL target and it tags this one, the next likely one would be there. That's a short-term low. And then all the way to there. And I said also in the tape reading stream, if anyone was in there, I said, okay, if it can fill this gap at the most, if it was to come back into this one, since I see this as a breakaway gap, it's most likely going to go back for that sell side. And that's kind of common, just tape reading skill. But that would be the reason as to why we dropped so heavily here on NASDAQ. Now, when you look at the other charts, like I said earlier, it's all misaligned. So it's going to be much harder to say and see it in real time, oh, it's dropping there, which is why anyone who took shorts today, I want to see those executions, just because to me, I want to see how you had a good bias coming into the session and were confident taking shorts, especially with kind of the lower time frame stuff we were seeing on a day like today. So tags up into that 1 hour IRL, starts to drop down on the 50-minute chart. You also have a short-term, you would have had a short-term SMT there, but with the SMT, it's going to be kind of funky. And as we go back to the 5-minute, let's overlay some of those PD arrays there. Over here, let's go 1 hour chart. Efficiency there, and then the sell side down here. Let's go to the 5-minute. Right, so 5-minute, you had Powell speaking. Now, I mentioned on the tape reading stream, this Powell speaking is not going to be as important as last week, which I may have been wrong. I may not have been wrong. It's very hard to tell with the news that we got. So I'm going to just void that and we'll look at the 10 a.m. news for today, just as the tape reading. By the way, if you're just now joining, this is the standard Q&A, market review kind of stuff. So any questions you have, psych related or anything, put them up in the chat and we'll get those answered. But as we know, with anytime you have 10 a.m. news, typically the silver bullet is a very high quality model. So in this case, runs up and tags into the higher time frame PD array, right? You have look at the fact that between this high and this low, number one, you have no inefficiency on the 1 hour until here. Neither do you have an inefficiency on the 15-minute chart in premium until that same exact area, right? So when you're looking at why does it have to come all the way up into there? In a price perspective, that's why. It's got to come up into an inefficiency on the 1 hour or the 15-minute chart. And that's the first one in premium, right? It's also paired with a bearish order block. But that's why it's got to come all the way up into here. Look at the 15. Normally you see it, come into here, right? There's going to be something there, but there's no gap there. This is inefficient, sure, but it's not in premium. You preferably want to see premium IRL to discount sell side. So it comes up, tags into there. On the 5-minute chart, you have a nice change in the say delivery. Right in there. You can also use that as a breaker. On a 1-minute chart, we'll see that a little bit better. As you go to the 1-minute chart, now you have your high, low, higher high that tags into the higher time frame PD array. These last down closing candles here will be used as your breaker. You can see in here you have a 1-minute inefficiency during silver bullet time. Being traded into, wicked into, plus the breaker, staying below consequent encroachment of the breaker. Drops back down, comes back in. Inefficiency there, paired with the wick. Drops back down again. Bearish order block there. Pair with the inefficiency here, which actually the most inefficient section would be here. Why is that the most inefficient section, Flux? Because you just have down, up, down. This upper quadrant, this gap in general should be used as a breakaway gap or also a measuring gap. one of the two, but more importantly, a breakaway gap, because this here is a balanced price range. If you think about all the resting quote unquote orders that be in this Y level, all the sell limits triggered, all the buy limits triggered, now all the sell limits again triggered. It doesn't need to come back up into that range because now all these orders would have been cleared out. If you're thinking about like it from an order flow perspective. So the upper portion of this, why would it be inefficient? It just worked through that. It's definitely efficient. They just paint rolled right through that. The paint's already, painted onto that wall. So this is the section that's got to come over and kind of refill that area. That's the inefficient section. That's why you'll reference the order block as well. Okay, as well as this, that's why I said the lowest portion would be right there. The wicks are inefficient, right? So, okay, you go from the candle bodies to the inefficiency. That's the most inefficient section. If you didn't even know that, you want to mark it up to there, that's perfectly fine too. I'm going to mark it the way that I like to mark it. And the true way I think you should mark it is there. Trades up into it, drops back down, continues to kind of give re-entry opportunities with order blocks and such in here, and then eventually just flushes one last time during the last ditch macro and makes the low of the session. Outside of the time window that you normally see, I mean, it's not technically, but and the same thing in here, you have this high also quote unquote outside of the session time window. Well, we normally look at the session, right? Anyone who's been in my private group, anyone who's been and watching these recordings, the standard session for a non-swing to Z day, the timing is very consistent, right? Very consistent. It always goes normally 9:30 to 10, 10:30 to 11. You know that. This is why I find today hard, because that doesn't happen here, right? It goes stalls out. This high is made at what time? 10:15 outside of that time window. And then it continues to drop and take out this low here at 11:13. So it misses this by 15 minutes. This section doesn't really matter if it's made at 10:30 to 11. It's past it, so that's fine. But why then flux that breaks the profile, right? Doesn't that break the profile? Well, we have to think about what the daily profile is. Okay, if London's making the high, and as we see this as a classic London protraction profile, London should make the high between what? 2 to 5. Okay, the re-entry should happen between what time? 7 to 10. That's our New York open. And the exit should happen between what time and what time? London close, 10 to 12. Right? Look at the fact that all that stuff is still there. Okay, right in here, 2 to 5. And then look how close we get to the 7 a.m. high. Right there. Doesn't take it out. Why doesn't it? This is why. Got to go in. There's meaning for everything. There's the re-entry opportunity. It gets really close to it. It doesn't take it out. So now we look at this as, okay, it doesn't actually break the profile, because the 7 a.m. high, as we see as this as the retracement high here, placed at 7 a.m., almost the earliest it can be, it doesn't get taken out by the 10 a.m. high. If you look at the price, let's pull up the prices here, just so you can see 22,848.25 right over here. 22,848.5 misses it by a tick. Why does it do that? If there's a meaning for everything, there should be a reason. This is exactly why. This would be the session high of that session, and now you've got between 10 to 12. It's forming the low there at 11:14. Very, very difficult profile today. Still follows the rules, as you see for the daily profile. For the session, it doesn't really. And that's why I find it very difficult to late move into the session. Silver bullet's still there, as you expect. And you also can use fib projections, right? You have your last manipulation leg here, your high, low, higher high before it runs into the inefficiency. This there is your last manipulation leg. Target, -2, -2.5, overextends it there, tags at the sell side, perfectly normal. And then in here, you have your -1 to -1.5. That would be where your silver bullet zone is happening. Right, silver bullet zone right in here. You don't really have a clean one today, to be completely honest. You do have an inefficiency right in here being traded into. And then you have the swing high of that inefficiency right here. So it actually overshoots it a little bit. Oh, actually, I missed it. There's a volume bounce there. So it overshoots it and colors outside the lines a little bit there. But that'd be the silver bullet. And then you do have your low risk sell opportunities in there. And then you have a couple of first stages that are being used. But very nice kind of sell model into there. And then it decides to consolidate and kind of just rebalance into the rest of this TGIF of this entire range here, right? So there's the market review for today. Like I said in the beginning of this, I find this very difficult price action to be trading within. And the loss I took was off of my long bias. Let me pull this up before I forget. The loss was off the long bias, basically entering in here on a 15-second, I don't know what it was, a 15-second IFEG or something, and then pyramiding in here off the gap, being traded into. Tiny stop loss, not a big deal. We'll get back into that probably, hopefully the end of this week, get back green. It's not a big deal if it's not, but just for transparency, there's the loss. But overall, this is a great day where you can still look at all the things happening, right? Open, high, low, close, still there. Market profile still there. In terms of a daily perspective, the session is a little bit funky, right? So daily profile is there. MMXM is there. Time of day, a little bit skewed. You almost can look at this as your open, right? This is the open, and then it kind of continues. Okay, now you start to see it a little bit better. And maybe that's what we have to do on a day like today. When Powell is speaking, you shift it over like to this. Now you can see a little bit more better the profiles being formed. But is that consistent? I don't know. So I'm not going to say to study that, as that's just something that we're seeing right here. Is it consistent? Probably not. And it's more important to study the more consistent things than one-offs like this and make a whole different model about it. That being said, still want to study what's going on, right? So, very, very useful day to study, because I find it, for me, this is probably some of the hardest price action, like I said. And the uncomfortable thing is to approach these days, right? We don't like to see when we lose. We don't like to see when we read the market wrong. We don't also like to see these kind of days where it just looks like it's doing something random. And we brush it off as, oh, the market was random today. Or, oh, it was a difficult day. Or, oh, I took a loss and it's something else's fault. If only I had seen X, right? Don't do that. It's a retail mind to do that. It's a retail mind to blame it on something like the news coming out that you took a loss. When in reality, there's a as we see here, there's an algorithm. There's rules that it always follows, even when it's hard, and it will continue to do that day in and day out. And it's these days exactly that will make or break good traders. If you're a good trader, you'll obviously look at this day, lose, and go in a journal and not look at it again. The great trader will come in and actually study this day, and how can they either, number one, avoid it, which for me, this is the day I should avoid. I took a loss today. I probably shouldn't have taken a trade. It was slightly after probably the window I was looking for. Even though the price action was going towards my draw and was giving me something good, coming back into the now in the market review, day I should have avoided. I think this is it's something that, this is why you have a stop loss, because these kind of days that are almost out of the random are going to creep up on us, and we may not be able to see why the answer is the answer in real time. So to over leverage, to over trade, to revenge trade, thinking we know where the bias is, or maybe taking a quote unquote free trade if you know where the bias is, there's going to be days where it almost in real time breaks the logic that you think is reasonable. Then when you come back into it and you got the answer key here, okay, well, it makes sense. We see it makes sense. I would have loved if NASDAQ would have done this. I would have loved it. It would have been super easy for me to trade. It doesn't. So I got to come in and learn. Either is there something I missed? Is there something I can do? I still think that even with the hindsight of this answer key I'm building for myself, the bias itself, I think, is very hard to see. We don't have any 4-hour SysD coming into the session. We're still kind of respecting this inefficiency with the order block. 1-hour chart, is very lethargic move down here, and we got all of this low resistance buy side building. So, and there's no stop run there either. So it's something that obviously you should be aware of, is when these kind of days happen, how do we approach them? You take losses, it's normal. You read the market wrong, it's normal. You don't understand the day, it's normal. But it is our job to come in and understand it after the fact. And obviously, if you can understand, obviously, either how to avoid it or to come in here and have some sort of approach to trade it, that's the best two things that you can get out of it. and to understand exactly what's going on and make sure, okay, it's not going to break anything. You just got to come in here and figure out what was going on and ask other people, right? Ask if someone else took a trade and they won. Don't take that as an attack against you. Don't take that as um, someone belittling you, or you don't take offense to it. Come in and learn, right? Ask questions. Why did you, how did you get that? I'm, I, I may be the quote unquote mentor, but if I see someone take a short today, I'm going to ask the question. I'm going to ask, okay, what was your bias coming into? How did you get the execution? And I asked that, and one of the gentlemen or ladies, I don't want to assume, GMXI said, okay, he went short off the order block at 1037, coincided with the new week opening gap right there. Beautiful entry. And not his normal timer model, so went a little lighter on the risk and just wanted to stop that was really protected. Took partials at C of the long wick from Friday, which is be right over here. Beautiful trade. I love it. It also lines up probably within -2, -2.5. So now I can see that. I'm like, okay, that builds for me even more of a bias that I should be waiting probably into silver bullet time and understand that, okay, if I don't see exactly what I'm looking for, and especially as I'm looking at it now at 9:30, right? I didn't like any of this, and I was pretty patient coming to the execution, so I'm not going to say, oh, I shouldn't have taken that trade, because at the time, that's exactly what I was looking for, and it was within the time window I wanted. Um, I was highly convicted in that trade, so I'm not going to ever go back and be regretful or I'm unapologetically taking that trade, and you have to as well. That was the best decision I could have made at the time with the data and with the emotions that display being flooded into my brain. So I'm not going to sit back here and say, oh, I shouldn't have done that or whatever, right? It's the tuition cost for a better model. That's all it is. Every single loss is like that. It's a tuition cost for a better model, because that risk that I lost, the risk that you maybe lost, you're going to end up using that as, it's going to be half of your risk in a month from now, or it's going to be easily swiped away with the 2R. So it's just a tiny little scratch, and it's a cost of doing business to learn and build a better model, and to understand either you don't need the day, or maybe we can improve our model slightly to capture something like this. Um, and yeah, in terms of net market review, that's really all I have for today. So if you got any questions related to psychology or for today or previously, you can put that up in the chat, and then we'll get out of here. Long DS YM pre-news behind side NQ's 6-hour charts bearish. Yeah, overall difficult because of the decouple, which is probably a higher time from consolidation. I agree. I'm with there. Tomorrow, do we have any news? I don't know. I don't know if we have any news. 8:15, whatever. So, and tomorrow, I don't know. It's gonna be weird. I'm gonna walk into it. If I don't like what I'm seeing, I'm not gonna stream tomorrow. If it's good, I'm gonna be very, very cautious. Either cut my risk in half or take a scalp or something. I'm not gonna demand anything. You don't consider the 3 a.m. 15-minute candle on NQ as manipulation because it didn't go over the midnight price. Let's go over here. So, very good question. Midnight opening price is not needed for the manipulation. Meaningful manipulation. And a good example would be, okay, if right at 9:30 we expand up, we don't have any manipulation there, but yet it still would work. Normally you see open, low, high, close, but sometimes right at 9:30 we send, and then you see there's re-entry at 9:50, and then it continues up, etc. There's two ways you can look at this. If you want the true, okay, where's the manipulation here today, Flux? One way, if you're using midnight open as your starting point, right there. Just like how we see sometimes with the 9:30s, you see the very tiny wick or something, boom, opens up, runs above the midnight open. That would count. Would it not? Then you also have, if you want a better visualization, if you're instead going to use the daily open here, let's just make this a daily open here. Boom, now you can start to see a little bit more of a classic open high and then a low close off the daily open. I don't like to use the daily open personally. just because everything that I'm looking for is beyond midnight. I don't use Asian range that much. I don't use anything, obviously, from 1800 onwards. So me personally, I'm constantly using midnight. And if we think about that, that's one of the things you can't pattern. It's relying more on logic. In terms of a daily profile, you can get sometimes this, and sometimes you can get something like, or any profile, sometimes you get something like this, right? And it doesn't need to manipulate below the midnight or above the midnight to be counted as meaningful manipulation, especially if it already manipulated. You could see this as the manipulation. You could see this as the manipulation back up into CE of this. So if it's already manipulated, what's the next likely to do? Expand, preferably. So yeah, best case, you want to be buying it above, or selling it rather, above the midnight opening price. Same thing with 8:30, same thing with 9:30. If it fails to run above the midnight opening price, let's say it does this, can't get above that, and also it fails to run above the 8:30 opening price, that is where the market is extremely weak. Same thing with vice versa. If it fails, if you're bearish and it cannot get above midnight open or the 8:30 and it continues to drop, you expect it to just tank. Obviously paired with narrative, but same thing with vice versa with bullish. If you do not see this willingness to manipulate past those opening prices, you expect a very long expansion range of kind of day. And normally you have very slight manipulation on those large expansion days. Either way, right? You look at Monday of last week, very good example of that. Below kind of the weekly open, right? You don't have a weekly open. That's nasty. Let's do the previous 3. You can see the weekly open here, right? It just barely kind of tags CE of that. So good question though. I like that. That's the kind of stuff that will make or break a good bias, right? So don't pattern it, don't visualize it. Obviously, if that's the one thing you're looking for, it's going to make a problem. I'm sure that's probably not the one thing you're looking for, but yeah, it's paired with everything. So if your bias is strong and you have that's the one thing that's missing, you could use it as a data point, or you could use it as, okay, I'm just going to void that for today and then replace it with something else. But the lack of SMT here, and obviously the decoupling, makes it hard to void that, I would think. Yeah, and you see it. I think I was obviously wrong. And I'd love to see what your bias, kind of the tools you were using coming into it, how I could figure that out. But yeah, market review finished. So if you got any more questions, we can put that up. I got to head off in about 10 minutes or so. So put those up as quick as you can, and then I'll get you out of here. And also, by the way, normally in July and August, I think this is in the weekly profiles, but sometimes you see consolidation reversal profiles in terms of a weekly during NFP week. Someone fact checked me on that. But my memory is correct. I believe that's. Let me see if I can find it. Weekly profiles, ICT. Month 7.
In a bearish market environment, our Falcon 2% of the
Where's consolidation reversal? So you can destroy bullish Friday.
above
Aha! I am right. Right here. Wow. Big brain moment. So you can destroy bullish Friday. When to anticipate. When the market is awaiting interest rate announcements or non-farm payroll, can create this profile in the summer months of July and August. Better to avoid trading these conditions. Well, there we go. So there's your conditions right there. And exactly written about what, 9 years ago. There you go. So what would this be? What profile would this be? So you got neutral to low probability. So and by the way, if you want to read all this and watch this entire thing, this video is fantastic. So it's the I'll link the video in the description if you want to. Not the description, but the chat here. You can go in and read that if you'd like to. Very, very useful video. Month 7 is fantastic. Same thing with month 10. I think both those months are fantastic price explanations of price, and those templates are great. If you're new to trading or intermediate to trading, that's not something you want to be studying, to be completely honest. You want to be studying more simple and less intricate things to be studying than weekly profiles. But yeah, there's your seek and destroy kind of profile. So okay, we just took to internal stops, potentially tomorrow bullish back up to here, and then Thursday back bearish. I don't know. I'm gonna see if I can profile it, but I don't really like profiling at profile sake, because that's a lot of times where you lose. Just, oh, visually looks like this profile. Let me, you get touched. So I don't want to be doing that. Yeah, I agree. Infinity. This is the first time I think I've seen an NFP Thursday. I think it's normally because July 4th isn't on a Friday. Very rarely is it on a Friday. So it's, I mean, July 4th will always be part of that first week, but very rarely does NFP land on that. So 8:15 tomorrow is ADP non-farm and Thursday is regular non-farm. I believe so. But I think unemployment claims got skipped this week, as I believe unemployment claims would have also been before, unless it's on Friday, Thursday. Oh, it is on Thursday. Okay. And we have 10 a.m. news on Thursday as well. So yeah, maybe it's best to just sit out this week and get back next week. ICT said he was going to be back. We'll be back till September. I was looking forward to a market review from him today. I wanted to see what the big man had to say about today's price action, but maybe I have to just go in and watch that those short-term trading market reviews, whatever, and see what's going on, and be done for the week potentially. So tomorrow, if you're in the private group stream, will be 50-50. Let's see what's going on. I don't want to be dealing with another day like today. So Thursday is a better chance of me streaming. Yeah, exactly. He would say say time distortion. Yeah, I don't like the subjective explanations of price. That's why I use the market truths. I don't like to come in here and say, oh, look at this, using this tool today that you should have used today, right? Like the Friday first presentation gap. That's why I personally, I love my mentor. I'm not saying anything negative against him, but the 2025 mentorship and the 2024 mentorship, I watched a couple of those videos just to see what he was on. Not for me. I don't like the subjectivity of it. If you're saying, okay, you're pulling it from here, why are you using that level? So when I'm coming into price action, every single time I'm doing my review, I'm using the same levels, same explanation, right? IRL to ERL, MMXM, 5 minutes SD, all the same stuff. So that way I can have a logic that's not subjective, but rather objective, that every day has to meet those requirements, and I can come in and learn from it and continuously build in my mind that mental model of what the market can do. There's only so many things the market can do. And to me, this is a new distinction, something that I have not seen before. And therefore it's a new distinction. And we have either the opportunity to skip this new distinction completely, or what do you gain out of the new distinction? If you have a new distinction, meaning something that is new about the environment that you're operating within, whether that's the market, whether that's the world, whether that's whatever it is that you are studying, that can be translated directly into what? Wisdom. Wisdom is when you have an 80-year-old telling you about all the different things that he's picked up across the time, and he's telling you, here's all the different things that can happen, or things that you want to be avoiding because this is the one distinction that you want. So wisdom is developed and derived from these days, where there's a new distinction about the marketplace that we don't really understand, and now we have to seek the wisdom, find out what's going on there. Now, boom, we know, okay, number one, still doing the same thing. Number two, we have an exact market profile it's following in the month it should be following it. So it's doing exactly what we should be doing. We can go and study that. Number three, we have expectations for the rest of the week. Number four, we have a further example that silver bullet on a 10 a.m. news day is high probability. So you develop even more wisdom. And this is, if you get enough of this, There's only so many distinctions that it can make, like I said. Normally it follows the same couple, but when you see it enough and you have enough, that's why people who have 7 years of experience with one model and one approach in the market typically are better than someone who has 25 years of experience and they're flipping multiple different times, because they never actually develop the kind of confidence, number one, and also the experience and the distinctions within that one specific approach. So if you're constantly flipping, if you're constantly looking at new things, I suggest you to just stick to one for 2 months or 3 months, one approach that works for you, and then build every day off of that way of looking at the market, right? And eventually you'll find one and a handful of tools that works for you. So the way that I teach is probably for every single time that I've seen it, no one has actually followed exactly what I use to the T, because everyone is different. So if I've personally mentored you, if I've had a one-on-one call with you, if I've in any way, had any effect on your learning, I'm greatly and deeply honored, number one. Number two, the way that we trade is always going to be different, because the stuff that I use, the stuff that you use, our brains are working differently. I like different styles and different explanations. You can get really close, but at the end of the day, you're not going to see price through my eyes, right? And it's the same data, especially like the 1 minute chart, right? And if you see me taper the 1 minute or the 15 second, or you see ICT taper the 15 second, whatever, the eyes that I see this price through is not the same that maybe you see it through. The same thing with someone who maybe trades the 3 minute a ton. I haven't spent a lot of time on the 3 minute. So someone's going to be able to see how the 3 minute candle's printing and know, okay, this is what it's going to be doing. I can do that on a 1 minute chart, on a 15 second chart. I can't really do that on a 5 or a 3 minute because I don't have that much time with it. I started from the 1 minute chart when I started ICT. So for the past 4 years, I've been looking at the 1 minute chart. That's the only reason I'm able to study it. And it was a terrible actually decision in the beginning, because it made me like suck in the beginning really, really bad. And I had to learn a lot more, and I lost a lot more and blew a lot more accounts than I probably should have. But at the end of it, it does pay off, because then I'm able to see price a little bit more precisely, I'd like to think. All right. So it doesn't look like we got a lot of questions today, which is perfectly fine. I think later on in the week, either Friday or Saturday, actually Friday, we have July 4th. So I don't know how many people are going to be available during that. Probably not. I don't assume a lot of people are going to be busy in the morning. So maybe we'll do it in the morning on Friday, or potentially on Saturday. And I'll keep you guys posted with that as usual. And this entire thing was recorded. I'm tempted to put it publicly because I think there's a lot of useful information in here. But either way, it'll be posted on YouTube by tomorrow, and you'll have access to that in the YouTube vids section of this Discord. And obviously, if I missed any questions, you can DM to me or put them and ping me in any of these chats, and I'll get to you at some time. It may not be today, but I'll get to you. And God bless you the rest of this day. Make sure you journal, do the things that are necessary to succeed. And if you did today and you showed up, you stuck through this entire thing, there's today for you. You completed it today, you traded, you lost, you won, you journaled, hopefully. If you didn't, go and do it. You learned from today. Today is finished, right? So we can rest. We come in tomorrow with the same vigor, the same kind of intensity of what we need to be doing. If tomorrow there's no trade and you don't like the pre-market price action, skip it. Have no remorse. Be unapologetically yourself and just skip the price action just because you don't like it. And if you see someone else taking a trade, that's their model. Maybe it's not. You don't even know, right? You don't know that. You just see an execution. So, anyways, take care, like I said, and I will talk to you guys very, very soon. Peace.